Today we are diving into the basic of the UK taxation that you should know as a non-resident landlord. Whether you are just starting out or looking to refine your strategy, understanding these taxes is essential for maximizing your financial returns. So let's go. Hey, my name is JS and today we are covering taxation. Taxation is a pretty dry but super important topic, so stay with me till the end. But firstly, as a disclaimer, I am not a tax accountant. I'm just sharing my experience as a fellow investor. So if you need to know deeper details that is specific to your circumstances, please find a professional tax accountant. As a property investor, you need to know the taxation at different stage of the process, right? During the purchase stage, you need to know the stamp duty land tax. Okay, just like buyer stamp duty in Singapore, like SDLT is a tax paid when you purchase property in UK. The rates vary based on the property's purchase price as well as whether it's your primary residence or is an additional resident. For NRL investors, you just need to look at the rightmost column where you are purchasing additional property, so you have plus 3% surcharge, as well as you are non-resident, you have a plus 2% surcharge. Okay, so therefore looking at these tiers, right, up to 250,000 is 5%. The next tier up to 925,000 is 10%, and so on and so forth. Okay, just take note, all SDLT paid is deductible from the capital gains tax if you sell. Now, you do not really need to memorize all this. I have put up a link in the description below where you can check the stamp duty payable on the purchase price that you have agreed. Okay, just bookmark it and use it for the future. Now, this is just an illustration. If you purchase a property for £350,000, the stamp duty payable after adding all the surcharge is about £22,500. Okay. Next, we talk about the taxes when you own the property. Right. In this context, we are talking about the rental income from renting out your property on the monthly basis. Now, looking at this table, right, you can see that the income tax is tiered with a basic rate at 20%, a higher rate at 40%, and additional rate at 45%. And the respective tiering level is indicated here. Right. Now, key point to note, there is a tax-free allowance of £12,570 for UK-based residents, as well as certain NRL from certain countries, for example, Malaysians, Thailand's, Indians, due to tax agreement in UK. But for Singapore, there isn't. So therefore, this is the rate that you're looking at. Also take note, for company structure, you are taxed at the flat 19% for profit up to 50,000, and beyond that is 25%. What are the deductible expenses for income tax? Basically, anything related to the property, be it the repair maintenance, the agent fee, MCST, etc., etc., right? All these are deductible. But take note, mortgage interest is not a deductible expense due to tax law called Section 24, but instead 20% of the interest expense will be given back to you as a tax credit. Now, what happens when you sell? In the UK, there's a capital gains tax, okay? So you pay 18% if your income as well as your gain is within the basic band. You pay 24% if your income and the gain is beyond the basic band. Okay, there is an annual allowance of £3,000 for personal name. There is no CGT for own residence. So that means to say, if you stay there for at least half a year, 183 days, and you sell the residence, you will not be paying CGT for that. Deductible expenses for CGT, the SDLT, selling agent fee, furniture pack, as well as mortgage broker fee, all these are deductible. And take note, if you own it under company structure and you sell it under company, right, profit from sales will be counted into the company profit, okay, which is taxed at 19% or 25%. But if you sell the company shares, you attract lower CGT, at 10% or 20%. And finally, on the inheritance tax, up to 325,000 is tax-free. Anything beyond 325,000 attracts a 40% inheritance tax. This is an important consideration because most properties in UK is either freehold or 999. The shortest I've seen is 250 years. So the way you play UK property is very different from how you play in Singapore, right? So you actually have an option to pass the property down to your future generations for them to enjoy the fruit of your labor. Now that I've covered some key considerations in buying to owning to selling your property, let me share with you some personal learning points in terms of how to better manage your tax bills in a perfectly legitimate way, right? Firstly, consider buying the property under a company structure. Now, company profit is taxed at 19%, which is slightly lower than the basic income tax level of 20%. And on top of that, there are more expenses that are tax deductible under a company, right? Secondly, buy under multiple names rather than a single name, right? When you do this, everything is effectively split by the number of owners in the property, right? The rental income, the CGT, when multiple tax allowances can be utilized. Now, bottom line, just try not to purchase under a single name, okay? Point 3. You can plan your purchase or sales well in advance if you do have plans to reside within the UK for work or for leisure or for studies, whatever, right? Because as I mentioned, for purchase, the SDLT is lower for UK residents. And for sales, if it's your own stay resident, you're actually exempted from the CGT, right? But to qualify as a UK resident, you need to reside in the UK for a period of 183 days within the tax year, right? The tax year is from 6 April to 5th April the next year. So plan it well, you may be able to achieve substantial tax savings. Now I've come to the end of the video. I hope you have gained some insight. Do seek professional help if you need, because I'm just sharing from an investor perspective. Feel free to drop any comments below. Remember to like and subscribe. Stay safe and see you soon.